The fixed income market is in a calm mood as bond appetite remains weak. Meanwhile, traders at UBA say they expect the bond coupon payment due to have minimal impact on rates. Chuka Wachuku, head of ALM and balance sheet management at UBA, joins me now for more market movement and the outcome of today's OMO auction. Chuka, let's start off with today's OMO auction. Spot rates, subscription levels, are the details out yet?
Thank you, David. The result is not out yet. 150 billion is on offer. The last OMO auction 1 year printed at 22.48. We expect that this particular one will print within that range, being that the system liquidity is pretty tight. We do not expect to see any further drop in the yield. So we see that with the level of subscription, which I do not think will be as high as the previous OMO auction due to the tightness in the system. So this will really affect the appetite for investors coming into this OMO auction.
Let's also talk about our interest across the different areas of the curve when we're looking at the bond and T-bills market now. Sell interest, we've seen that already observed on the belly of the curve so far. How are investors positioning moving forward?
I think everything still boils down to liquidity. On the trading side, on the bond side, for example, we've seen a bearish sentiment, especially on the 2033, 2031. There was supposed to be a bond auction on Monday. It was moved to next week. And that, I guess, because of the tightness in the system. I believe that DMO felt that, look, subscription will be very weak. And so they decided to move it to next week. And so that has also affected trading in both the T-bills market and the bond market. It's all about what we've seen so far is a bearish sentiment. Traders trying to sell off even at a loss in order to be able to create liquidity, for different obligations. So liquidity is really biting really hard and is really affecting the trading, at the both end of the T-bills market.
Yes, and Chuka, wrapping up the conversation as well now, just before we crossed over to you, we were talking about challenges around the FX market and how the unpredictability of things is also affecting different strata, taking a look at manufacturing. But now going forward, we saw the marginal appreciation of the Naira against the greenback. But how do you see things going much more into the month of July? And we also having forecast as well with the MPC meeting just on Monday, Tuesday, thereabouts. How do you see things shaping up and being a major feature? Because if the CBN governor says the worst of the Naira volatility is over and we're still trading well above 1,500, then we still have a big issue at hand. Your take on the pendulum swing here?
So the Naira is currently trading around 1570, 100. Like you rightly mentioned, it's a slight appreciation, about 4 to 5 basis points, which really isn't anything to go by. I think that what the CBN governor is saying is that, so far the foreign reserve has appreciated, and I believe that that will give CBN, more space in order to intervene. Apparently, they intervened last week, pardon me, greatly. This week as well, they've intervened on a couple of occasions, and I believe that, going into the rest of the week and then the end of the month, we see more intervention from them, and that obviously will, probably bring down the movements, upward movements in rates.